Melissa, you're on.
A warm welcome back from the weekend, everyone. I am Melissa Enoch here at the FMBQ studios in Lagos.
It's Monday, the 8th of December. This is your Money Moves.
All right, let's begin with your news now. Spar Group, the South African supermarket retailer, has reported full year 2025 earnings that fell despite revenue gains. The company posted a revenue rise of 1.6% to 132.4 billion rand for the financial year ended September, supported by stronger grocery and liquor sales. Diluted headline earnings per share from continuing operations fell 8.96% to 795.4 cents, while gross operating profit rose 2.3% to 2.8 billion rand. Net debt dropped to 5.4 billion rand following the sale of Switzerland and Poland businesses. Spar enters 2026 with improved financial resilience and streamlined operations. In Cameroon, Access Bank PLC has completed its takeover of Standard Chartered Bank Cameroon following the British lender's confirmation on 5th December 2025 that the sale of its Cameroon operations is now final. Standard Chartered said the transfer marks progress in its 2022 strategy to exit 7 African and Middle East markets to streamline operations. The deal launched in 2023 and approved by the Central African Banking Commission is part of Access Bank's broader acquisition of Standard Chartered businesses in Angola, Botswana, Zambia, Cameroon, Gambia, Sierra Leone, and retail/corporate operations in Tanzania. In Zimbabwe, the private sector has reviewed the 2026 national budget and macroeconomic framework, with businesses assessing how the new fiscal measures, tax policies, and growth projections could affect investment, operations, and overall economic performance. Here are excerpts.
When I compare ourselves with the regional countries, why I like to compare with regional countries, because it gives us a kind of measurement to say how are we faring against other competitors. Be that as it may, I have put a slide that speaks to, first of all, maybe manufacturing sector. Now, manufacturing is one of the now largest contributor to GDP. When I looked at the trend analysis, at around 15% of GDP, it's quite significant. However, when one starts to look at the contribution towards exports, we see a little bit of weaknesses there. At around $500 million, which is 6% of total exports, I think there is a room to say how best do we position ourselves so that we can support manufacturing.
The import of the conversation we're having is how do we unlock this GDP? How do we get everybody to benefit from this GDP? I hadn't seen James's presentation, but it has struck me that our numbers at 53 billion are very significant. And if I'm to be fair, Honorable Minister, I quizzed the IMF and the World Bank on how accurate these numbers are. And they're very accurate. It's quite remarkable to collect $8 billion in taxes. And I think we have to congratulate government, we have to congratulate industry, and all the other players for their efforts to get us here. When you look at the high-level numbers, if you are able to grow GDP, double it in 5-6 years as we saw, that's remarkable.
When I compare ourselves with the regional countries, why I like to compare with regional countries, because it gives us.
In Congo, the Republic has tightened conditions for cobalt exporters, requiring a 10% royalty prepayment within 48 hours and a compliance certificate. The new rules add complexity to the recently introduced quota system, which replaced a month-long export ban in October. No shipments have moved as producers work to meet the requirements. The circular issued on 26 November also mandates quota verification, joint sampling, weighing, sealing, and a new quota verification certificate from ARCOMS, the Strategic Minerals Regulator. Kenya's Strategic Investment Board has broken ground on a new international center, a project expected to strengthen the country's position as a regional hub for trade, investment, and business services. The facility will host global partners, offer modern workspaces, and support Kenya's growing role in continental economic integration. Here are excerpts.
Standard Investment Bank is a story spanning 3 decades, driven by the vision, determination, ambitious mission of our founder to create a world-class investment institution rooted in integrity, innovation, and our national values. From our humble beginnings at Rehani House in 1995, Standard Stocks, having been duly licensed by the Capital Markets Authority, and with a very lean team of 5 employees under the stewardship of our founder, birthed a dream. This dream carried with it a vision to transform the Kenyan capital markets and provide an opportunity for every citizen to partake in the prosperity of our beloved nation. Over the years, we've weathered market cycles, embraced technological shifts, and adopted to an ever-evolving capital markets landscape in Kenya, to the extent that we were the top stockbroker by traded volume by the turn of the century, with only 1 trading desk. In the years 2003 and 2007, we received our investment banking and unit trust licenses respectively, allowing us an opportunity to pioneer new products, expand our service offerings, and consistently raise the bar in investment advisory, wealth management, institutional research, and stock brokerage services. We have stood with entrepreneurs building their first ventures, with corporates scaling into regional powerhouses, and with investors seeking safe and strategic growth. We were among the first to push boundaries in alternative investments, fintech-driven wealth solutions, and digital platforms that put the market access in the hands of everyone.
Sir, your host.
In Egypt, Bakeland Egypt has unveiled its first locally produced alternative to imported bakery ingredients at Food Africa 2025, marking a major step in its product localization strategy. The RMC Group subsidiary is also expanding exports to 6 new markets, including Germany, Italy, the US, Thailand, and Pakistan, with Paraguay to follow the next year. The company now exports about 30% of its output to nearly 30 countries and has recorded 30% export growth this year. To meet rising demand, Bakeland is building a new 10,000 square meter facility to boost capacity 5-fold. In other news, Namibia has officially appointed Modestus Amutse as the new Minister of Industries, Mines and Energy, following President Netumbo Nandi Ndaitawa's announcement. Amutse takes over from Franz Kapofi, who had been acting in the role since the dismissal of Natangwe Itete in October. The new minister outlines his vision and priorities for the ministry earlier today. Here are excerpts.
I know our ministries. I know them as an institution when it comes to electricity supply. Both security of electricity, the reliability of it, the availability of it, but also the cost of it. Because if we continue to import a larger percentage of electricity, energy, then of course it will become expensive because we don't control it. The supplier controls the price, isn't it? But I don't understand what is preventing us from increasing our efforts on energy generation. Sometimes it's policies, but these policies did not fall from heaven. They are made by ourselves. Why should we make policies that do not address the needs of our people? And we still think that, yes, because this policy, this law, I always call them bad laws then, if they do not address the reality of what we are facing. And therefore, this one, the development of a national strategy on energy supply security, is very, very high on our agenda.
Finally, on News Now, Kenya's NSE banking sector index has been approved for trading as an index futures contract, marking a major milestone for the country's derivatives market. Trading is set to go live on Friday, December 19, 2025, providing investors with new hedging tools, improved market depth, and a dynamic way to manage exposure to one of Kenya's most influential sectors. I am Melissa Enoch, and that's it on News Now. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round.
We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
You're up.
Welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there, Grace.
Thank you, Melissa. Let's take a look at how the markets opened the week. Starting off with the equities. The NGX All-Share Index closed on the positive, up 0.28%. The BROVM slipped 0.27% to 351.93. The Nairobi Securities Exchange declined 0.26% to 179.12. In South Africa, The Johannesburg Stock Exchange fell 1.18%, while the Zimbabwe Stock Exchange advanced by 2.34%. And in North Africa, the EGX 30 closed higher, up 0.48%. Let's do a quick round on some of the Pan-African currencies. The Rand weakened 0.19% to 16.96 against the US dollar. The Egyptian pound edged up 0.02%, while the CFA franc firmed 0.10% to 563.06. The Kenyan shilling slipped 0.03% to 129.26. The Moroccan dirham strengthened 0.25%, while the naira appreciated 0.18% to 1,451 naira 80 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 1.16% to $63.01, and US WTI declined 1.22% to $59.35. Natural gas dropped 4.03% to $5.07, and Arabian gasoline slipped 1.10% to $1.81 as of 13:20 GMT. Now, finally, two metals prices. Gold dipped 0.10% to $4,238.60, while copper eased 0.49%. Platinum strengthened 1.00%. Aluminium fell 0.87%, and iron ore was down 0.59% to $107.24 as of Friday, as at 13:22 GMT. And that's our most markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up today. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching, and bye for now.